Are 50-year mortgages actually going to be a thing in Canada? I mean, they're toying with the conversation in the US, Donald Trump coming out talking about introducing a 50-year mortgage. And ultimately, there's a lot of, hemming and hawing from both the banks, from investment, and obviously economists on how this could play out. And we've been getting a lot of calls here in Canada saying, do you think that would be something that would come to Canada? And ultimately, we really don't know the answer to that just yet. But based on the current government, based on the economic conditions in the housing market, I probably don't put it past the Canadian government to maybe introduce something similar or something close to it. I mean, ultimately, there are some things, and we did have some pretty long mortgages just not long ago here in Canada. So I do want to take an opportunity this week, go through some of these conversation points, share our thoughts and opinions on a 50-year mortgage. Once again, thanks for stopping by. If you have not yet subscribed to the channel, please consider subscribing, hit that notification bell, leave your thoughts, questions, and concerns, especially around a 50-year mortgage in Canada. But more importantly, like and share the video if you picked up something interesting in this week's conversation. Let's get right into it. So by now, maybe you've heard or not heard that the United States, Donald Trump and the administration are looking to improve affordability by introducing potentially a 50-year mortgage. Now, that doesn't mean that it's already there. We have to really understand a couple of different nuances in the US. Number one, average home price across the board, much lower in the US than it is here in Canada, especially for the average home. Ultimately, we also have to understand that their banking system is a little different. We've talked about it many moons ago on the channel, how Canadians and Americans have different types of mortgage products. In the US, you actually get to take a 30-year mortgage for 30 years. It's a fixed payment for the next 30 years. So ultimately, yes, rates could be a little bit higher, but we have to understand that the renewal process in Canada is much more frequent. So Canadians don't take on a 30-year fixed mortgage. It's generally 3 to 5 years. So the renewal option will come a lot quicker, which ultimately impacts the back end of any particular mortgage that's done here in Canada. Now, I mean, ultimately putting that to the wayside, I mean, we could see banks in Canada ultimately introduce longer term fixed rate mortgage products down the pipeline. That could be something. Some banks already are initializing, longer terms. But ultimately, who really wants to pay that premium on that rate for that longer duration fixed rate mortgage? And especially when you think about all the penalties and fees. Now, thinking about a 50-year mortgage here in Canada, ultimately brings on a lot of questions. A lot of viewers might be saying, well, if I have a 30-year or 25-year mortgage and I go to 50 years, what does that really look like? So we have to understand a few different things. A 30-year mortgage, you're probably looking at interest on that mortgage. Let's say a $500,000 mortgage at 4%. You're probably looking at around $360,000 of interest over the lifespan of that mortgage. And that, you have to really consider that if that mortgage comes up for renewal, if the rate stays consistent at 4%, then, it's $360,000. But obviously in Canada, we don't go for mortgages that are 30 years. So you have to understand that. Now, if you were to take that and add, an extra 20 years, bring it to 50 years, well, that's pretty much doubling the interest portion that you're going to pay. That's about $660,000 of interest that you'd pay over the 50-year lifespan of that mortgage, considering and only if that interest rate remains at 4%. I mean, this is the reality. Once that mortgage renews, you're open to more volatility, more higher interest rates, lower interest rates over the span of 50 years. Ultimately, you also have to consider a few other different components. Now, for some Canadians that might be rooting for a 50-year mortgage because it means more affordability, right? In the light that you might be paying more interest over the lifespan of that mortgage, some Canadians are looking at it saying, well, at least it will get me into the housing market, with a lower payment. So on a $500,000 mortgage at 4% on 30 years, you're looking at a payment of around $23.87 a month, as opposed to 50 years at $19.34 a month. That's about $450 savings, give or take, on cash flow. That's additional cash flow in your pocket that you could be putting aside to maybe pay your bills, utility bills, so on and so forth. But once again, you have to keep in mind that interest. Now, once again, this is all hypothetical. I mean, I'm not I'm not saying that, hey, I'm a big proponent of 50-year mortgages. I do remember when the Bank of, not the Bank of Canada, but obviously the regulators, OSFI changed, CMHC changed the rules back in 2008, where we had 40-year amortizations, and basically, with the higher debt loads from consumers, the risk to the financial system, they pulled that back down to 30 for conventional mortgages, 35 for insured, and now they had pulled that back down to 25 not too long ago, but introduced that extra 5 years, that 30-year conventional style mortgage, 30 years for first-time home buyers. Remember that originally had come into play for builders if you're buying pre-construction, then they opened up the door to all Canadians that are deemed first-time home buyers, and if you fit the criteria, you can get a 30-year amortization on an insured mortgage as long as the purchase price is below 1.5 million. We've talked about that at great length. I don't want to really talk about it here, but if you have questions about your mortgage, you can always reach out to us, and we'll be more than happy to be very specific about your particular situation. Now, with that all being said, I don't think that the regulatory body here in Canada is poised to set a 50-year mortgage. I think what they potentially might do is look at, maybe other parameters. Now, they're already looking at tightening the stress test, rules that may come into shape. We saw the 2008 financial crisis. It was something that, obviously caused a lot of spillover into Canada, the rest of the world, global markets. They also are talking about in the US maybe reducing the minimum credit score. I mean, there's so many things that are happening right now in order to sort of bring in buyers in the United States. And ultimately with Canada right now, and this is really a conversation about, the direction of the Liberal government right now, where they're going to make housing more affordable. I mean, how do you make housing more affordable? Either home prices have to really pull back significantly, or they have to introduce legislation or rules that will allow Canadians to get into the market. Now, once again, back in 2006, 2008, and prior to that, we had 40-year mortgages in Canada. So it's not that it's never happened before. We've seen it, and at a particular time, my parents, when they bought their first home, not only did they get a 40-year mortgage, but they were able to buy it with zero down. I mean, yes, home prices were different. Let's not go into that area of the conversation. But I mean, ultimately, it wasn't something that we've never seen before, right? So ultimately, what I'm saying is that if the government does bring it in, I think they do really need to put some restrictions on it. Once again, if you extend the amortization on the mortgage, it must be a default insured mortgage, right? Obviously, yes, of course, the taxpayer is going to be on the hook, but I mean, the banks aren't going to allow this to happen, even though the banks probably want this to happen. I mean, I'm sure there's a lot of brokers out there, mortgage brokers and realtors and banks and stuff like that would love to see that because they make more money on the back end. Brokers, more deals potentially coming in a market that's pretty slow. I mean, once again, I'm looking at it from the perspective of the actual buyer and affordability. When we go to look at a transaction, it's not about, hey, yeah, you're approved. It's, hey, you could be approved. Here's what the actual reality of your situation looks like. Here's what the bank will approve you at. Here's how you actually should be looking at it, especially when you think about after-tax income that you're taking home. Already, a lot of Canadians, when qualifying for a mortgage, they're using, before tax money, right? What you're getting, not necessarily, before the government takes out money from your pocket, right? Before that tax is paid. So gross versus net, you really have to look at that. And then once again, looking at these terms, maybe you shouldn't be able to refinance. You can't refinance into a 50-year mortgage. If you take a 50-year mortgage as an insured product, maybe at that point, if you do need to refinance, you have to go into a conventional 30 or 25 years or less. I mean, ultimately, that should be a rule that may be something that we could look at to ensure that Canadians do not over leverage themselves. I mean, look, if you're buying your first home, maybe there's an age situation here that they add in. Maybe there's other requirements that they put in. I mean, ultimately, they want to ensure that they're not discriminating against Canadians, but you need to also protect the financial system. You also have to make sure that banks are not going to be over leveraged and lending out money. This is ultimately a big question. I mean, banks stand to make a lot of money. Individuals will look at this and say, well, I don't want to pay all that interest. Hey, guess what? You don't have to take a 50-year mortgage. You can take a 30 or 25 or less. But ultimately, what will this end up doing to the housing market? Now, you may be saying, oh, this is going to be crazy. Well, just think about it. Not too long ago, we went from 25-year to 30-year insured mortgages, and many thought or prescribed that this was going to, put a lot of pressure on the housing market, and it actually didn't. What's the point of having a low, cheap interest rate if you're worried about your job? You're not buying a house if you don't have a job, right? It's not going to help you on your mortgage qualification when you're not working, right? Once again, once all the dust settles on this, really, that's when the question sort of will open up a little bit more and say, what will it do to housing? And I think there needs to be a lot of research, and a lot of great minds need to get together, especially here in Canada, and really think about how this could play out. And I hope that the government actually reaches out to professionals, the mortgage professionals in the market, to sort of get their true unbiased opinion on how this could play out and ultimately what they're seeing. So once again, not saying, hey, this is a good thing or a bad thing. I'm saying this is potentially a thing. Not necessarily going to happen here in Canada anytime soon. But once again, when we see things like this sort of play out in the United States, it may end up leaking over, bleeding over into Canada, especially because our economy, the Canadian housing market, is really feeling the pressure. And a lot of the potential MPs, a lot of these builders might be lobbying the government for additional measures to help push that inventory. Canada is a real estate economy, whether you like it or not. That is the ultimate truth. And we need to see what's going to really play out here in Canada. Let me know in the comment section below, what do you think about a 50-year mortgage? Is it a good idea? Is it a bad idea? Let me know down there. But until next week, thanks for stopping by, and we'll see you all next week.